Hi, I'm former NCUA Executive Director Mark Treichel. I'm here today to talk to you about credit union mergers. Now, some of my clients are asking interesting questions about mergers. Ironically, these questions are some of the same questions I would hear over and over again when I was a regional director or held other positions at NCUA. The first question is, how come NCUA didn't come to me with that merger? This credit union's right in my own backyard and they never approached me. The second question I used to hear a lot, and still do, is how do I get on NCUA's secret merger list? Well, today I'm here to dispel the rumors around both of these types of questions. So, regarding that first question, how come I didn't ever find out about this merger until after it happened? Most mergers are voluntary mergers between the two merging credit unions, and in that case, it's very rare for NCUA to know anything about it on the front end, or your state regulator for that matter. The reality is, these credit unions decide to merge, their boards meet, their CEOs meet, they reach an agreement, and oftentimes, by the time NCUA becomes aware of this merger, it's only when they submit their merger packet to NCUA for approval. Now, because of that, NCUA can't come to you with these mergers because it's an agreement of two corporations deciding to merge, and NCUA really only blesses it on the back end. So let's get to that second question, the secret merger list. It doesn't exist. There is no secret NCUA merger list. Now, about 10 years ago, NCUA did form the NCUA Merger Partner Registry, which, if you're interested in mergers, you should sign up for at ncua.gov. The purpose of the registry is to get a broader pool of participation in credit unions that will cost the insurance fund money, thereby reducing the cost if you have more interested parties, and also to create transparency on how the process works for credit unions that require assistance. The merger registry is online at ncua.gov. You can go on and have a very broad reach. You can say that you're interested in credit unions across the country, or you can limit it to your state or your county. You can be very precise about which credit unions you might be interested in. However, just because you sign up for the registry does not mean that you'll get selected as the winning bidder in these situations. It requires a great deal of due diligence to find a partner of a troubled credit union that is suitable in terms of financial health, asset base, field of membership, service facilities, product offerings, and several other factors NCUA takes into consideration. So when does the merger partner registry apply? It does not apply to those credit unions that are voluntarily merged that I talked about in question one. The registry applies to two types of transactions in which healthy credit unions can acquire another credit union's field of membership. The first is an assisted merger of a troubled credit union, and the second is a purchase and assumption, or P&A, of a liquidated credit union. So, troubled credit union. What's the definition of a troubled credit union? Well, this is where it gets interesting because there's several definitions that work together in this area, and I'm going to try and walk through that for you. A credit union that's in troubled condition is a credit union that's either a Code 4 or a Code 5, or a state chartered credit union that's a Code 4 or a Code 5, or a federal credit union or a federally insured state chartered credit union that's been granted assistance under Section 208 that remains outstanding and unextinguished. So, a troubled conditioned credit union is a credit union that's a Code 4 or a Code 5. So, if you acquire a troubled credit union via merger or purchase and assumption, do you automatically get their field of membership? It's not automatic and it's not that simple, but you may be able to do so. Now, if you're a state chartered credit union, that's going to come down to your negotiations with your state law. Generally speaking, in my 33 years of experience, the states are able to do this more often than not. So it's very likely, if you're a state charter surviving credit union, that you will be able to pick up the field of membership of the merging credit union, whether that's a state chartered credit union or a federal charter. Now, if you are a federal chartered credit union, that also depends. Not all troubled credit unions are emergency mergers, and that's where definitions start to weave together here. Being a troubled credit union does not automatically qualify you to acquire the merging field of membership. In order to acquire the field of membership, NCUA must determine the merger or purchase and assumption is an emergency merger, and that the merging credit union is in danger of closing or in danger of insolvency. So we've talked about troubled condition, we've talked about emergency mergers, we've talked about in danger of insolvency or in danger of closing. What does this really all mean? Under the emergency merger provision of Section 205H of the Federal Credit Union Act, the board may allow a credit union that is either insolvent or in danger of insolvency to merge with another credit union if the board finds that an emergency requiring expeditious action exists, no other reasonable alternatives are available, and the action is in the public interest. So NCUA must find that there's an emergency and that the credit union is either insolvent or in danger of insolvency. Now, the Federal Credit Union Act gives the NCUA board broad authority to define the term in danger of insolvency for emergency merger purposes. So, insolvent and in danger of insolvency. What does that mean? Insolvent is pretty simple. Your net worth is below zero, right? So what's in danger of insolvency mean? In danger of insolvency, in making the determination that a particular credit union is in danger of insolvency, the NCUA will establish that the credit union falls into one or more of the following categories. 1. The credit union's net worth is declining at a rate that will render it insolvent within 30 months. In projecting future net worth, NCUA may rely on data in addition to call report data. The trend must be supported by at least 12 months of historic data. Number 2, the credit union's net worth is declining at a rate that will take it under 2% net worth within 18 months. In projecting future net worth, NCUA again may rely on data in addition to call report data. The trend must be supported by at least 12 months of historic data. 3, the credit union's net worth, as self-reported on its call report, is significantly undercapitalized. Undercapitalized, as a reminder, means between 2 and 3.99%. And NCUA determines that there is no reasonable prospect of the credit union becoming adequately capitalized in the succeeding 36 months. In making its determination on the prospect of achieving adequate capitalization, NCUA will assume that if adverse economic conditions are affecting the value of the credit union's assets and liabilities, including property values and loan delinquencies related to unemployment, these adverse conditions will not further deteriorate. And 4, the credit union has been granted or received assistance under Section 208 of the Federal Credit Union Act in the 15 months prior to the region's determination that the credit union is in danger of insolvency. So, emergency mergers, where there's a cost to the insurance fund, is where you can pick up the field of membership, generally speaking. I was involved in a lot of these over my career in all the different positions that I had at NCUA. I've got a lot of background in this, so if you're putting in bids, this is something that I could assist you with. Lastly, if you have any questions, comment below, or as always, reach out to me at info@marktreichel.com. I appreciate your time, and I'll see you down the road.